recording. Oh, there we go. We're recording right now. That's because Bob's taking care of that. Okay, so we're going to get started here in just a second. So let me just start off, Mark. So what are you doing as far as in this crazy market? Anything today, and how'd you come into today as far as your exposure and so forth?
Yeah, well, this has been this has been and frustrating isn't the word. It's more just more of the same, where you try and get position in a few names, you jockey, and then you wind up seeing some things sort of come back around. So you dip some toes back in. I didn't really do a whole lot, this week. I moved my stop to Amazon to even. I trimmed HZNP on Monday that I already owned. Well, I bought it back this morning.
Okay.
I also nibbled on crowd, but and then I have a little bit of SE left that I'm glad, that I was sort of moving just a little bit, an average of break even between where I'd sold an earlier piece, but I'm under 50% invested. I was a little impressed by the breadth coming off the lows, so I figured, well, let's dip a toe and see again. I'm skeptical, and hoping this, at least maybe we'll get something that I can trade a little bit. But right now, I'm taking what I think is acceptable risk. I got to buy something though, is sort of the way I took it. So I started there.
Yeah. So yeah, I'm not too frustrated myself because I've been pretty much in cash. So, and anything that I have done has been at such tight stops that it's really not putting much pressure on me. And also, I'm taking very small positions. I actually did end up just buying a little bit of crowd here this morning as it pulled back, and I put out that note that I'd be buying it if it was a strong market. I said, all right, well, let me take a shot here, and as it pulls back with a real tight stop, and then I traded out of it. I don't know, maybe an hour later or whatever what it was, and just I made $1,500. It wasn't a big deal, not big for my portfolio, of course. Just a few little trades, but just real quick, just to tell you, why I even do some of those smaller trades. Sometimes what I'll do is I'll do a little trade like that, pick up a couple $1,000, and then I'll finance another trade. It might even be in the same stock. Maybe the stock pulls back a bit, and I go back into the stock, and I'll try to finance my stops. What I try to do is build up a little cushion where I can then use those profits to finance a bigger position or a bit or a larger stops. And like I said, sometimes in the same position if I want to try to hold it for a bigger move. But so it's a little bit of mathematics there, and again, when I go in small, if I make a small amount and I give it back, and I end up getting stopped out when I finance that next stop, I'm just breaking even. It's no big deal, and it's nothing big gained or lost, and I'm going in with very tight stops. So let's take a look at something like the Qs, because here's a perfect example of a trade that has turned around. Well, first of all, let's just talk about the original stop was so tight, was whatever, under 1%, I believe, that just this 3-day move down was a beautiful trade. Risk reward. You have to always look at risk reward. Now, we're playing it for a bigger move here, but certainly, like I pointed out, even with these indexes, we're getting 1 to 3 days. We're getting these short moves, and then you come ripping back here. But risk reward, this was I don't know, 3.5 to 1. Something like that, 3 to 1. So a great, if you just made these type of trades, let's just say that's all you did was take, risks of 3 to 1, or 1 to 3, if you will. You can be doing this all year and make a fortune, if you can, obviously, if you can, find these type of trades. But backing into the risk, and just looking at DIA also, we're officially still in DIA. I'm not in DIA, but we're officially still in this as a short. It never hit the stop. It came, and this looks like, it comes all the way back here, but this is where, if you're patient, your original plan is, whatever it is, 2-3% stop, you're still in this. And again, this is the type of trade, like, I'm either going to get out of it, or if I'm come all the way back here and I come back up to where my stop is just, I don't know, 0.5% away, or, very small amount away, I'm certainly not going to stop out up here when it's so close to being stopped. I went through all that. Might as well now let it stop, might as well let it stop you out. But at this point, we got this break and now we're getting that first rally back. I usually ignore these first couple days and then see if it can then resume that downtrend. So we're still, still sort of in the neutral zone here as far as nothing really has changed much as far as the short side. I am seeing some stocks, and I want to talk about today. I'm going to go over some of your some of the stocks that you guys have sent in the simple Dropbox. I'll go over some of your picks there. What I'm noticing is that a lot of them are low RS. I don't think that's a reflection of poor stock picking on your part. I think it's a reflection of what's being offered in the market. And I don't see I'm not finding a lot of high RS names. Mark, are you finding that there's a lack of, merchandise that would meet our criteria in the higher relative strength? So we're having to maybe go down into the lower RS?
Yeah, absolutely.
Yeah, I mean, I try not to, and if I do, it's going to be with smaller positions, and I'm just a lot more careful. I try to stay away from the laggards, and I'll highlight them every now and then. We do have some names on here, that we put up here that are definitely on the lower RS side. BJ's one of them, which is actually, working. It's coming out of this little pivot right here. You had that reversal pull back by, coming up for a couple of days. Who knows if it's going to last more than a few days. UPS is not a super low relative strength, but this is actually pretty tight here. And that's a nice little tight pivot. So if this could break out from here, I mean, that's one you can try here. Pfizer, of course, already broke out and then pulled back a bit. So this pullback, if you didn't buy it, was fine to buy it on this pullback back to the breakout. That might do well with what's going on with the COVID and Pfizer. Johnson & Johnson has been having problems, and Pfizer seems to be doing well with their vaccine and probably going to have a booster shot now. We put on Roku. AutoNation blasted off on earnings, and that's followed through quite nicely. Actually, that came out of a nice base. These are some names that I probably would be in, if things weren't, as dicey as they are right now. But I got a bunch of things I want to talk about here. So I don't want to start jumping all over the place, but let's take a look at this DOCS, because Mark, you said that, you were looking to maybe buy this morning, but it gapped. So you stayed away from it.
Yeah. I mean, this one, obviously this is pretty short as far as the right, it's not much of a right side, but I thought maybe for a momentum play, for a trade. But if I'm going to play something like this, I want it to come out really clean. I'm definitely not going to chase a gap on a name like this. It did squat pretty bad too. It's trying to come back though.
Yeah.
It's kind of an avoid now.
Yeah, it made it went up like 10%, and then it came all the way back down almost to its low, and now it's in the middle of its range. So right now I've seen a lot of these IPOs that are actually working from these shorter bases, shorter right size. It just seems like, there's a lot of retail money, runs them up, and then you see that this profit taking comes in. So they are tradable. But I would not chase the gap either. I wouldn't chase these gaps. And, that's something I want to talk about today, sitting on your hands, and, I'm not going to chase stocks, and I'm never getting pressured. FOMO is never an issue with me ever. Maybe 30 years ago it was, but it never is an issue. And if it's an issue with you when you're being pressured into the market, then, you probably, you're one of those people who wants action as opposed to, sticking to a disciplined set of rules. But you just got to, just say to yourself, look, what's being offered here? Are there stocks that are meeting the criteria? And if there are, fine. Even if we're on a sell signal, even if, whatever, you read IBD and it says marketing correction, whatever your indicators are for the general market, there's nothing wrong with taking a few positions, some smaller positions, and seeing if they work. If the stocks are working, fine. And then you pyramid from there. But what if there's no stocks being offered? Then there's really not much that you can do. Let's see a few other names. So Crowd we talked about. So in the bigger cap names, and let's just take a look also what we have as some open positions here. Do you still have Amazon, Mark?
Yeah, this is my biggest position.
Yeah.
I basically just moved it, when we had the it started to slip last week, and then Monday I just said, okay, I'm moving anything I have to break even or better. And so I just moved the stop to even, but I'm trying to stick with it. I mean, it's a big base. So if we do
Yeah.
hold here, I would expect this to work.
Yeah, and like I said this morning, if you're really aggressive, you could be adding back here. We bought it here. I sold it right into the rally. We took half off, of course. Now it pulls back to the breakout. You add it back, and basically you've captured that difference now. So you're ahead of the game. And then what I would do is just on the stop that we have. I would just dump the whole thing if you hit that stop. If you pyramided up on that, something like a PNW, which is up about 5%, 5.5%. Purchased it here again, just being patient. And just because I always try to say, just because we get a sell signal, you don't have to sell your stocks. I mean, if you're at a profit and you want to use a break even stop, you have that option. That's the nice thing about when you get at a profit, you have options. And when you get at a decent profit, you have some really great options, because you can sell some of it and you can finance your risk and then go through a pullback and not really, lose any principal, or even, like I said, you might want to add back if you capture some profit on the upside. But again, this has been stair stepping its way up. It's acting really well out of a pretty large base here. So I mean, this is the type of base I love. Coming out of a correction, oh, I'd be all over this. This is really, a perfect little base. Even something smaller like a Google, which money is still hanging in these FANG stocks. It's quite impressive. Again, bought it here, and it looked like I was like, this is a bad buy. Which bought it really. I was just trying to get a little bit of exposure because these stocks were working so well. Came in a bit, but came right down near the stop, but didn't hit the stop, and then bang, right into new high ground. And this is still inching its way higher. Again, not up a lot, only up about 4.5% from the purchase, but you could still be in this, and certainly now with a break even stop. So anyway, let's look at some of the names that you guys entered in here. So ADSK was one. This let's go look at a weekly here. It's coming out of a pretty good sized base here. You got an outside week. It looks pretty good. This is a 50 RS though, and it doesn't have much upside momentum. Again, these are very low RS names, so I'd be careful with these. But yeah, if they start working, you can try to play them and see what see if you can get some traction there. This ATEX is one also that you guys put in here. I like it. I like what you're looking at with the little pivot here. It's a little extended small base, and it's not strong enough to be a power play. So again, many of these are low RS. Let's see, AXON. So this is a bigger base trying to form that right side. Again, coming out of a correction, if this had some good relative strength, I might be interested in this. But this is a bit, I'm not even sure how deep is this correction. Okay, 42% or so. So it's not too excessive, but it's pretty big. Let's see, CCCC. A little slow here, huh? Yeah, I mean, I like this big base. I don't like this big decline right here that it's going right into and supply to the left. So I don't think I'd be buying it here yet. I know you might make a case for buying it today, coming to that little pivot point, but I don't know, you're coming right into supply here and then some supply to the left. To me, it's just not crisp enough. Not maybe, in a market that's rip roaring and everything's working, you could start cheating like that, but I wouldn't right now. HCAT, another one where I see there's a little pivot here. You got an undercut. Again, going into the supply, you can see reversal, 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 reversal. I'd want to get through there. I'd want to get to new high ground. These are some names that I'd rather pay higher for than buy them lower at this point and get some confirmation that they're on the move. Another one, ILMN, sorry. That's similar to the previous one, the AXON that we just talked about. Similar kind of setup. LH. Let's take a look at LH. Yeah, trying to set up this little cup with handle, not too tight on the right side just yet, but looks interesting. MEDP. So this one, I like how tight this is, but you did have a big decline here. If you're going to have that big decline, you do want it on the left side. But again, you're coming right into where it just got cracked. So I'll be a little bit nervous about that at this point. what is it? MODU or MODV? I can't tell. Let me see. MOD. Try that first. MODU. Nope. Must be MODV. MODV. Sorry, I can't read my own handwriting. Yeah, big base here. So it just needs to tighten up on the right side. See, a lot of these need some work, something like this OMXC, which this is one of the few that are sporting a nice RS. This is a 99 RS. This is very powerful, very strong. Maybe if it moves above this 2870, you can try to buy this for a trade. A lot of momentum. And then OMCL, look at that real quick here. In a good market, particularly if we were in a correction and it was holding up like this, I would be buying this coming out. Even with this short little, amount of time, it's held up really good. So this is a potential. But again, with the market the way it is, I'm being much more of a stickler. I'm being really, really careful here. Again, too, I've had a good 6 months, so I don't really have to push. But I can tell you right now, if you had a bad 6 months, it'd be even more that you shouldn't be pushing. So, I mean, I could afford to push if I wanted to. But the point is that, if you're underwater, then you really got to rebuild slowly. Let's see here. Let me get to some questions. So in a strong market, is ASAN's intraday pullback at 1040 normal for a power play? Or shouldn't it just go, given how many times a good start has reversed? It's hard to trust whether to stay with a position that starts to pull back. Well, okay, so again, now, so you're asking, it sounds like you bought it. Okay, for the record, I had a nice profit early this morning, was shaken out at break even. Okay, so I mean, look, if you want to, be that tight on it and break even stop that quickly, that's fine. You're gonna do a lot of trading, like that, and you're really protecting your downside. I'm okay with that. I see what you're doing, as long as that was your plan, going in. But you start circumventing your plan, and because you get scared out of it, then maybe you're trading too large. But again, I don't want to chase the gap here, and I'd want to see this tighten up, go inside, and then come out. Like Mark just said, you really want it to be clean. Mark, is ASAN. I mean, you saw this, of course, and you love power plays, but you stayed away from this.
Yeah, I don't really see much of a pivot here. But to your point, when things aren't working, I want to be tighter. So I think his idea of, hey, if it goes, I'm in. But if it, once it starts pulling back, I'm out at break even. If that's your plan, I think that's in this environment, not a bad plan. Or to
Yeah.
your point earlier, Mark, you just take the short-term gains when you get them,
Right.
especially in a
Or
setup like this that's not really very well developed.
Yeah, or part of both. You take a little profit. See, once again, if you just sold some of it here, then you could have allowed a better than break even stop and still not lost and been at break even. But of course, you would have had half the position, but you could have financed it, and then you still have a break even, but you can give it more room. So that's sort of the aggressive, the conservative aggressive approach that I take very often.
And with that, Mark, I would say too, to your point about this gap this morning, the lower quality the setup, the far less likely you should even consider buying a gap, even if it's a small gap. I want to see it come. I want
Absolutely.
to see it come out, nice and clean.
Yeah. Yeah. And again, with the market is, questionable, you really got to be, even like Mark said, even more careful. And we're going to really be, being sticklers about, getting it really perfect and having those very crisp pivot points. But as long as you're coming in from a low risk entry, now, again, if I don't care if you're chasing a gap, fine, but you don't want to then get caught and, say to yourself, well, I'm going to let it close the gap and come down and stop me out and have this big loss now. So you're going to have to just, keep it on a tighter leash. If you're cheating, if you will, of the lack of a better term, if you're being sloppy, well, okay, if you're sloppy with your buying, then make up for it with being tight with your stops, because you're going to get stopped out probably more often. So you're going to have to make up for that. Always think about, your risk reward and making up for any inefficient deficiencies in your buying with the risk. Let me see. Let me get to more questions here. When you look to the left for supply, why is it important to see not only how many days traded above line of resistance, but also how many days it closed above that line? Why is the close important? Well, it just shows that it was able to hold that level and to a close above it is good, because a lot of times what you'll get is a stock will move up, but then it'll get hit with selling and have a bad close. So it just means, when you're closing bad, you're closing in the lower end of the range. Well, that's a sign more, that's a sign of distribution as opposed to a sign of accumulation if it's closing up in the range. So a close is better if it can hold that level. So looking at how many times, it was at that level, if there's, big down moves from that level, a lot of volume, always looking left to see how much traffic is there, and try to assess, if there's a lot of supply there. And then, of course, and closes, yeah, above that level or not, it's not a major thing, but it's better than seeing reversals for sure. Let's see. It seems that institutions continue to support their favorite growth stocks like SHOP, SE, et cetera, during big red days, pull back by after a down day. Looks like maybe the theme that's working. In some cases, stops can be tight. Yeah, I mean, that's true. But what I'm finding is, look, if I saw a theme and we saw a whole bunch of pullback buys, setting up and working, I might be moving in on pullback buys, but I don't see like there's this theme of pullback buys. I think we can selectively find just about anything that's working. We could find some breakouts that are working. We can find some pullback buys that are working. We can also find, for every one, I can probably find 20 that aren't, or that stopped you out. I don't know, Mark, are you seeing a theme where in any one area, like a technical theme that we could latch onto? Or, I mean, I see it being more random, and I just don't, for every one that I see that's working, there's a lot that aren't working. I don't know.
That's been the theme, right? Exactly.
That's the theme.
The theme has been there's just enough setups to keep you interested, and they suck you into taking a few trades. That's at least been the theme I've been noticing. But no, not like where we're seeing a lot of cups or a lot of cheats. I would say no.
Right. I mean, it's really about what's happening over a number of trades, not in any one trade. Now, maybe, you've got really good eye and you're spotting some good setups. And like I said, I'm all for trading is, whenever you have a trade setup, as long as you have your risk delineated and you're taking, a small amount of risk for the type of reward that you can expect. And as long as you're not getting crazy and trading more or bigger, if they're not working. I mean, I'm okay with putting your toe in the water and trying some things, but if they don't work, then you got to pull back, and maybe try something else. And if that doesn't work, you got to pull back and probably do nothing and wait for, some better setups and see things working. But if they're working, great, push it. I'm all for pushing. Look, when things are working, I push, and I push hard. That's how I make those big returns. I mean, I am a pig when things are working, that's a paraphrase of a quote from George Soros, is you got to be a pig, to make big returns, but not all the time. You got to know when to be a pig and when to get in there and just and get real aggressive, and know when to be a scared chicken. Most of the time I'm a scared chicken. It's very, very seldom that I'm brave. So could you both share some thoughts, your goals that you set in the first few years of trading, especially process goals? For example, did you set goals based on return, improving your risk reward relationship, hitting a specific number? I read Mark's Mindset book a number of times, done with whiteboarding exercises, and I think some trading specific examples would help me narrow my focus. So Mark, early on, what did you have, specific goals or process goals, and like what did you set out for your goals, and or targets when you first started?
Well,
Curious to know, just to
yeah,
know.
right, yeah, sure. It's a
Do you
good
even
question.
remember?
Yeah, well, if I can remember, listen, when I first went on my own, I had two small children and two on the way. So it was basically my goal was, can I make enough money to survive?
Feed the family and not
Feed the
blow up.
feed the exactly, that is exactly what it was. Feed the family and
Exactly.
don't blow up. Which I was barely able to do my first year or
Which
two.
those are always my goals, by the way.
Still mine too.
Yeah.
And then I would say, in terms of, I think you said process specifically, to just try and figure out, how does this really work? Well, I didn't have I had some other strategies I was kind of doing, and then I found, sort of stumbled my way into swing trading, and then following Mark on a few things, and then the service was just kind of starting. So it was a progression, but I've been running really the same screens for since the first time I went to the master trader program. I think I've made maybe a few tiny tweaks, but kind of as
Right.
far as process, then you have a playbook, and then it was just then consistent application of discipline.
Yeah, my goal, was to learn. I wanted to learn as much as I could and to really understand everything that I could about the strategy that I was trying to employ and develop. And back then, of course, I O'Neill was one of the few that I got guidance from, because I did go to a seminar and read O'Neill's book, and I was reading, books like from William Giller and Love, and trying to put all that together. And I just decided that I'm going to come up with a set of rules, and my goal is to follow the rules as disciplined as I can, and then to analyze my results and make those adjustments, but to try to really just hone in on what needs to be done and just forget about the return. Forget about the money. In the beginning, I was all on the money. I was like, oh, I lost this amount of money. Oh my God, I didn't make this amount of money. Oh, time is going by and I'm not in the market. The market's taken off. It was all the wrong things. Then I said, okay, the heck with all this, because this isn't getting me anywhere. I have to focus on just the process and what needs to be done and master that. And I just toned it down to a very, very few, price patterns. I just wanted to perfect buying from a pivot point from a certain pattern. And then I added those over time and did the same thing, applied the same thing, just to process and to really have my goals were to just focus on process as much as I could. And then I started looking at my account balance and seeing, wow, I just had a really good week. I just had a really good month. And the results started coming. And the more that I got off the results, the more I was getting the results, if that makes sense. But that's how it started with me. But it all started with me with pictures of mansions and cars and boats on my wall. That's how it started. But then I realized that wasn't gonna do it. I needed to make my goals more specific to the trading. Let's see here. So now that we're mostly waiting for better conditions to present themselves, how much emphasis you put on the O'Neill follow-through day concept? Well, not that much. I mean, it's part of the risk model. So the general market component is based on the O'Neill follow-through concept. Not exactly, but very, very, very close. So it's part of it, and I certainly would like to see that. But I'm more looking for an O'Neill follow-through day coming off of a bear market, and starting that first leg up. That's where I'm looking for the follow through to try to get an idea if we got a bottom put in, a reliable bottom. And then, but still, even then, it really doesn't matter. If I got a follow through day, I'm not going to buy a single stock unless they meet my criteria. And if I get no follow through day, I'm going to buy stocks that meet my criteria, because sometimes I get stocks that meet my criteria before I get a follow through day. So I'm going to the stocks. Like 90% of everything I do is based on the individual stocks. So, no matter what we talk about all these indicators and macroeconomics and all this stuff. It's all great and it gives me like a perspective, but I guess I've gotten good at not allowing that, no matter how strong of an opinion I form on the macro stuff, no matter how much I have access. I have access to, Ned Davis Research. I don't know how many, probably 10,000 indicators and models that I have access to at my fingertips, and I have certain custom models that they run and I track. I don't get sucked into that though, and it never overrides my stock picking being the real major part of what I do, because I've learned over time that it boils down to that, and that's what's paid me. The models and all the macro stuff never paid me well, but when I focused on the stocks and I started letting the stocks lead me, that's when I started getting all the returns, and I became wealthy from trading. What was the setup called on the ALB trade you made on Monday? Because it turned out to be pretty profitable. Well, it wasn't that profitable for me because I sold it, but it did go up. Yeah, I mean, it was just a pullback. It came down on a gap, it pulled back, and intraday, I just said to myself, I thought that it could come back. I thought you can get a reversal like this intraday. I came all the way back to this breakout point. I've seen this many times where you break out, the market's weak, stock tries to hold up, it's acting great, and then it has that one down day on a gap, and then it comes ripping back. So I just went in there with like a tiny little dollar stop and said, if it doesn't just come right back here, I'm gone. My gut did say though just to hold this and because I thought maybe it can put in a pullback buy here, and that's what it did. But so I didn't make much on it. Is Lulu a good? Well, you have VCL patterns, VCP, but maybe that's a typo. Let's LU. Let me pull that up on the screen here. It's a 63 relative strength, first of all. So again, you see you're going to these low RS names. I like the big base. If we look on a weekly here, you see it's a big base. I like the big base, and I like the fact that it's near new highs here at all-time highs in a weak market. But this right side is sloppy and sort of just wedging up here. There's a bunch of these names that are working, that are just blasting up the right side and taking off. This might work great. I don't know. But for me, this is not crisp enough. With a 63 RS and this sloppy action, I'm not going to trade it. But look, I pass on names that blast off every single day. So doesn't mean it can't go higher, but it just doesn't make my cut. I had mRNA lined up, but did not pull the trigger and missed out as being newer. Starting with this, how do you recommend mentally handling this? It does upset me. Well, okay. So Mark, how do you? It's hard for me to relate to that, to be honest with you. Okay, so after all these years, I realized that look, being upset because you're going to miss trades all the time. Like I think how you handle that is you have to go into trading with a different level of expectation. Like that's going to happen a million times. So either get used to it, or you're going to be a really unhappy trader and probably quit trading. Okay, so your expectation is just probably too, is probably too rosy, that you're not going to miss trades. Missing trades is part of it. You're going to miss them all the time. I miss them all the time. I mean, how about for me? I'm in excuse me. I'm in the trade sometimes. I'm in the trade and I get it perfect. It moves up and I scalp it or something, and then the thing, 2 days later is up 10% and I made two, or whatever. I mean, that's even more difficult sometimes because you did it right. You pulled the trigger and then you didn't profit from it as big as you could. So, but that's going to happen a million times. I mean, Mark, how do you handle, you've had so many times where you've reported here of things that you either missed or was in, and then you quadrupled your position, then it came crashing down on you. I mean, there's so many times that we're wrong. It's
right. Well, I would sort of ask too. He said it upsets him, if it upset him that he missed it, or if it upset him that he didn't follow his plan. If you didn't follow your plan, that should upset you, and that's what you need to fix. If it just upsets you because you're not in something that's going up, well, come on. Well, you're never going to be happy. You're not going to be successful, because that's not what trading's about. You're never going to catch everything that goes up. And I think the best traders don't care about that stuff. They're too focused on their own game and playing, what's in front of them, rather than worrying about, the pitch they missed in the last at bat or whatever.
Yeah, it's just unrealistic. It's going to happen all the time. I mean, it's like a batter, like Mark just said with a pitch analogy. Not swinging at a pitch that's perfect and comes across the plate and it's a strike and it's a perfect pitch that you should have swung at. Well, okay, but that's going to happen, more than half the time. So I think Mark just made a very good point though. And that, did you follow your plan? Okay, if you followed your plan, then there should be no remorse whatsoever. If you didn't follow your plan, then you got to say, why didn't I follow my plan? Why didn't I pull the trigger? And that was my plan. I went into it. Why didn't I pull the trigger? Okay, well, it's maybe fair. Okay, well, if it's fair, then maybe you're trading too large. Trade smaller, so you're not afraid. Build that confidence. So if you followed your plan, then there should be no remorse at all. If you didn't, then you should go back and take a look and see why you're not following that plan. So let's see. shorted DIA and QQQ in a good position and kept the positions through the market rally with stop at all-time highs? Is it too risky to still hold them now? Well, I think it's the least risky now because they're the closest to the stop. But the QQQs are what, just a little tiny stone's throw away from the stop. So you've already taken the risk. I mean, you've already given back the profit on the QQQ. Like, you shouldn't be asking yourself that now. Look, if you're at a 3R, 3.5R profit, and now it comes all the way back and you're at break even or even a loss, and you're like asking questions at this point, well, then you didn't really think that out too well. Hold on one second. I got to put you, because I am expecting a call and I got to grab this. Just give me one split second here. Okay, sorry about that. Just had to tell them to call them back. So again, if you're asking that question right now, you should have had that already planned out. If this thing comes back on me, I'm prepared. I'm playing it for a bigger move, so I'm prepared to break even, or I'm prepared to take the full stop, or taking some of it off when you were at 3Rs could have financed your stop and still profitable if you took the loss. So there's a lot of options there. Let me see here. Position sizing. I read your risk management material in the book and watched the videos. How am I doing? It is, I have 16 slots because I'm a newbie and still get scared. Each slot is 6.25%. Position sizes, I'm risking 4% in each trade. My stop loss max is 4%. I came to this because my average loss historically is 4.5, keeping it smaller. Okay, my historical average gain is 16.7%. That's fantastic. 3.6 times my average loss. My target is set at 3.6 times what I'm risking. Okay, it's not a question. I don't know what you're just telling me all your stats. So I don't know what you're asking me. But that sounds great. It sounds like you're managing it well. I don't know if I would make a complete line in the sand at 4%, because some might be tighter and some you might want to give a little bit more room, but you want to, average your loss. You want to average no more than, 1/2 your average gain. Let's see, would greatly appreciate it if Mark Minervini could share an example or two where you placed initial stops when he took an overweight position with tight risk. Use intraday charts for stop placement for tight risk. No, I don't use intraday charts virtually, ever. I mean, I have a 5-minute that I keep up, and if I see it pulling back, I can see if it's pulling back to the, the breakout, but I'm looking at the daily chart. The stops are very easy. I mean, I'm only, just to give you an example, like for instance, something like crowd today. So let's bring up crowd, and I'll bring up an intraday just to show you here. So bring this up here. Sorry. So you see right here, it comes out in the morning and now it pulls back right here. Now you got a little pullback buy. I mean, you could have even saw this intraday where you set up a little pullback buy and then it moved up. And that's where when it started coming back, it hadn't made that pullback buy yet. I think it was on this third bar down, maybe somewhere around there. That's where I posted it and I said I'd be buying this as it pulls back, anticipating that it could pull back maybe 50% of its range, 2/3 of its range. So I'm really just looking at it pulling back within its range. I could see that on the daily. And then I want to see it, I want to see it come back and bounce and take off from there, fairly in a fairly short period of time. If I'm, buying that intraday pullback, I'm expecting it to get to come back and get a good close. So this is working out perfect so far. But again, my stop on that was just, I had it at the low of the day. That was my stop. I figured if this breaks out and then it pulls back, a natural pullback should just come back a bit in its range, and the least it pulls back, the better. If it starts coming all the way back down and it takes out the low, that's a problem. That's not a normal early day reversal that's going to right itself. So that was it. And now sometimes I'll just put a dollar stop. I just, maybe the low of the day is too far away. So I just say to myself, hey, I want to risk $1,000 here. So I back into that trade and I just risk, a dollar amount. So Mark, you bought crowd today?
I did. I bought it. I bought it right through the daily pullback buy. If you look, that even that intraday pullback buy, like you always point this out, these happen on multiple time frames.
Right,
So-
right. So on the intraday, so now were you using the intraday pullback buy, or were you saying you bought it on the pullback buy
No, I
on
just had an alarm. I had an alarm through,
off the
sort of,
daily?
yeah, off the daily.
Right. So as it came through this, two 255 level,
Yep.
that's it. Yeah. So yeah. So see, Mark just traded it when it first came out here. It was on a little gap, right? Little tiny gap.
Yeah, it was still inside of the day, the day prior. So I guess, yeah, that was a little gap.
Yeah.
But
So
pretty
I
tight.
didn't want to chase it right off the hop, but once I saw it came out, then I decided to just play the little pullback there. Sometimes if it breaks out and then it pulls back, you get some information, because as it's pulling back, you're seeing how it handles that. Like I said, as it pulls back here, I start buying it, what I would refer to as the danger point, being the low of the day. So now I'm really close to that stop, as opposed to buying it on the breakout. See, I buy it on this breakout here and I set a stop off the daily. I'm setting a stop more off of my intraday idea. But now here's the real kind of secret to big performance, low risk, is that the nice thing is you can go into a trade like this, set that stop at the low of the day. And if it takes off and gets you at a decent profit, fine. Now you're good. You can play this for a bigger move. So you might get yourself a 5-1, a 10-1, a 20-1 reward to risk by taking that really small risk. I'm okay with going in with really tight stops. You just have to make sure that you understand that you're going to have to trade a lot more, and your timing has got to be impeccable. So if you want to trade with those super tight stops, just realize that you're going to get stopped out a lot. So you've got to be ready for that, and you've got to have that expectation that your reward's going to have to pay for all those little stops. When you day trade with large position, you try to have a large gain that will cover risk many trades that will need to stop out quickly. Is this about right? I'm not sure what that means. When you day trade with large positions, do you try to have a large gain that will cover risk of many trades that need to stop out? I'm doing nothing different. Okay. If I'm trading an intraday trade, I'm going in and I'm saying to myself, okay, what is my average gain on this type of trades? What is my average gain for, intraday trades, or what do I expect from this particular trade? And I'm going to put my loss at a fraction of that, 1/2 of that, 1/3 of that, 1/5 of that. So it's no different. It's the exact same thought process. And I guess the unique thing is that I'm trading off of the daily patterns. Like even today, like with crowd, I'm trading this an intraday trade, but I'm trading off the daily pattern. So I'm trading the breakout from this pullback buy off the daily, and then as it squatted back in early, I'm playing an early day reversal. I'm not trading off of the intraday. Although I might trade out of it intraday and take a quick profit, or maybe a partial. I'm still using the daily. Okay, so let's see. Okay, let's see. I'm just reading there's a few comments here, not questions. So I got to scroll through those. Was Roku a legit pullback buy on 720 with a 3-step entry? Made it to your buy alerts on 721. So 720 ROKU. See, sorry about that. Well, not really. I mean, I would like to see a pivot. I would have liked to seen it gone inside for a day, maybe even if it wasn't off of this first day and go inside. I mean, it went inside, but I would like to have it stay inside for a day and then move up. And I'll draw that for you. Hold on. So let's just say it comes off like this, right? And then on this day here, it closes. This is that bottom day right there. It closes at the high, near the high of the day. Then I'd like to see it go inside and then come above the high of that day. Does that make sense? The high of that day right there. That would be my preferred setup, where we went inside for one day and then took out that high of that previous day. So this just pulled in and then took out the high. You can do that too. That's fine. I mean, that is technically a pullback buy, but not my favorite. But yeah, it was a pullback buy. But I just think that this is going to need, more time. I don't see this just ripping up, but it could. But so I'm being more patient there. Let's see. What do you think about NET? Is it too extended? That probably means it is when someone asks that. Let's see. Yeah, well, I mean, we had this on Bylord, I think over here. I can't remember. I think it was over here. So yeah, it's still extended on a short-term basis and on a longer-term basis, but it's acting great. I mean, you had this very efficient move, and then a quick pullback when we market pulled in, and now it's just moving right back to the new high ground. So this is really acting excellent. Let's see here. On the QQQ trade, I took 1/3 off at 3 Rs and 1/3 off at 2 Rs. My question is this spot to bring it back to full position. I wouldn't. I wouldn't bring it back to a full position here. I don't. It's a little too resilient. The market's a little too resilient here. I thought we would fade off. We'd rally maybe one day, maybe 2 days, fade off. It's getting a little bit too resilient. You're so close to the stop now. I mean, you're very close to the danger point. So you certainly could enter here and then use the stop at the all-time high. That's fine. But I just don't like the way it's acting. Maybe if it acts a little bit, maybe if we can get some downside going again here, and it starts to look like we're selling off again, maybe then. But I would wait. But again, you are trading very close to the danger point, so you do have profits. So it would make mathematical sense if you want to do that. 1 second here. Given the current circumstances for months now, wouldn't be a better idea to trade only pullbacks just to be more selective? I don't understand how that's being more selective. I don't know how that has anything to do with being selective. I mean, I could be selective and buy breakouts. So I don't know what that means. So it's saying Mark Ritchie, somebody's saying Mark Ritchie has no audio. I guess, I don't know. Mark, you there?
I am.
Okay, I don't know. I think if you can hear Mark, raise your hand. Yep. Okay, everybody can hear you. What about SQSP here? Earliest possible place to get an IPO base. Let's see. I don't know that symbol. SQSP. SQSP. It's a tongue twister symbol. Yeah, this is sort of bottom picking here. I would wait myself. This really hasn't even broken the downtrend yet. So I see what you're looking at, but even if you're right and it moves up, it's probably going to need to pause out. I'd still look for some type of low cheat or cheat to develop. It's good, and this is good to watch though. This is early. This is really early to watch this, but I'll put SQSP. That's why I don't know about it yet. It just isn't forming that right side yet. Let's see. When a stock reaches buy point on a daily but is extended intraday, do you buy anyway or wait for the intraday to pause? Well, first of all, on the daily, get away from the intraday. The daily, if it's extended on the intraday, it's extended on the daily, unless you're using some type of intraday pattern, which I wouldn't do that. Just look at the daily. Forget the intraday. You don't need to look at the intraday. Is it extended on the daily? If it's not, then it's viable. All right, I'm gonna have a few more here. Can you please talk about style drift and action seeking nature? Through these last 4 months, I've become much better. Two-day max trader. My batting average has improved from 64 to 68% this month with 2.51 to 1 ratio. That's excellent. That's fantastic. As a day trader, your batting average should be higher, and your risk reward, or one or the other. You should usually have better numbers. You should be in more control with the day trading. Let me see. Should I work to adjust my style back to swing, or is there downside to maintaining this sniper style going forward? Well, I mean, look, that's up to you. I mean, whether you like this style, if it's working for you, you're making money and it's doing well. I just ask myself, what do I need to do to achieve my goal? I mean, you can achieve your goal in a lot of different ways. My goal is to get to, a good return and not have drawdowns. How do I do that? How do I, and be consistent? Can I do that through short-term trading? If there's no, great short-term trades being offered, are there swing trades being offered? I'm just looking at what's being offered to me and trying to get in there with the best, risk reward profile possible. So I'm not really having like a preconceived notion. I'm letting the trades pick me, but everything is within the same style. So I don't think that style drift, I don't know exactly what you're doing, but if you're buying off the dailies and you're selling quicker because you're not getting much follow through from the swing trades, well, then you are swing trading. I mean, you're just, your parameters are tighter, and you're just not, letting the bigger gains come to fruition because you're not getting them. But that's the adjustment that I've made. But changing styles, that's a whole different story. Where you say, I'm just going to be a day trader versus I'm going to swing trade. That's, making a commitment to that particular style might be, great if that's what you want to do. And that's how, you can get to your goal. I don't feel I'm changing any style. I know some people say, you've changed your style. I'm not changing my style at all. I'm buying pretty much exactly the same. Like, Crowd is a perfect example. I mean, it's a, again, that's a buy that I would buy for a swing trade or a long-term investment. Or short-term. It doesn't matter. I'm buying it from the exact same spot. The only difference is that I'm just using a super tight stop. And because I'm using such a tight stop, I now can take smaller profits because they'll pay for that risk. And if I can find more of these and turn these over more, I can still get to my goal. And until, the swing starts working and I can hold them for bigger moves, I'm going to stick with what's working. I bought HZNP at 97.05, just before you added it to the watch list, working a stop 90.80. Been waiting for this one a couple of weeks. Do you mind showing what you see and where you would be buying and selling? So this is HZNP. Let's bring it up. HZNP. Mark, this is more Mark's pick. It's been on my list for a while, but Mark put this on today, and he's in it. So maybe you want to comment on this one?
Sure. I think he bought it. I think he bought it right. If you were going to buy this one, he's right. It's, the RS it's kind of been in this base for a while. If it doesn't work here, it's not going to work. It almost, it's tightened up a bunch of times, and I thought it was going to fail on Monday. It didn't. It came right back. I actually had a position, and I just decided I'm going to cut it Monday when it gapped down, and I'll buy it back if it breaks out, because I thought things might really come unglued. The earnings are good. I really like the volume on the weekly too, so I think it's worth a shot.
Yeah, I mean, I've stayed away from it. It's a little lower RS, and it was getting a little erratic here on the right side. And buying as it breaks out above this high, it was I felt like it's not real that tight coming out there, but it's fine. For if you're trying to play it for a bigger move, a swing move, you're giving it a decent sized stop there. So you're giving it a full, I guess 8% or so, and that low makes sense. Now, if it comes out real big here, as this stock was up, let's just say it's up 101, 102. Now you got a big breakout. I don't know if this came all the way back down and reversed, and maybe close at a new low here today. I'd probably trim. I wouldn't give it that full stop. So I'd have to see and play it day by day. Once it breaks out, depending on what the action is, now I start looking for, confirmations and violations, and I might change that plan as far as the stop's concerned. Let's see. So ILMN, could you go over that one more time? Yeah, so this is just a big cup with handle here. This isn't really the type of trade that I would normally make, unless we're coming maybe out of a big correction and there was a lot of stocks setting up like this. I'd like to see more VCP action, but it's acting pretty good here. So, but yeah, you got a cup with handle here, and now you got sort of that Hardaway crossover where you take out the low and now it comes back, but it didn't just move right back into new high ground. That's the true Hardaway crossover. It stops you out and then it rips back up, and it doesn't give you a chance to get back in. This is actually pausing here and giving you a little pivot. So this is sort of like a little reset. So Mark, Fidelity is down today, and I have some open positions. I know if you, in your book, you mentioned that you maintain another account to short my longs. To short my long if needed to, but all of my equities in one account if there's another plan of attack. Not really. I mean, you have to have, phone numbers now. You can call these brokerage firms and wait for an hour. It's really, it's sad the way they have things set up now. You do have the online, which is instant, but if that goes down, you're kind of on your own. So the really only way to really protect yourself, is to have another account somewhere else, and then you can short against those longs if you went down. So it could be very unnerving. I'll tell you, if you have a lot of money in one place and it goes down, and you're in a bunch of positions, the market moves against you. See, that's another risk. People don't understand. Like when the market breaks and you get into these volatile markets, it's not just your stock risk. You're like, oh, well, I'll sell if it stops me out. Yeah. Well, I got news for you. When really fast markets, systems go down. You can't get your trades off. They don't answer phones. Like there's risk that goes beyond. You're not always in that level of have that level of control. And in tough markets, and especially if the market's unraveling and crashing, that's why then you really want to just go to cash and step on stay on the sidelines. Let's see here. All right, just going to take maybe another one or two questions here, and then I got to run. Do you use eSignal versus MarketSmith in your screening? Well, eSignal is not a screening tool. It's just for charting and portfolio monitoring the portfolio throughout the day, getting quotes. MarketSmith is a true screening product, so they're completely different. Yeah. Let's see if there's so there are a bunch of okay, so here's somebody else saying there's a bunch of brokerage outages happening right now. How do you deal with this? So I wonder why that is. I wonder why that might be, where it's not brokerage outages. Maybe it's something at an exchange that they're using the same routing or so. I don't know what that is, but there you go. I mean, there, there's even risk where a bunch of brokerage firms, I guess, can go down. There's like I said, there's lots of different risks, but the only way to really handle something like that is to have other accounts where you can short against your box. You run screens every night or just on the weekend? I run screens pretty much every day. It depends. If there's in a time like right now, there's not a whole lot of stocks. Sometimes I know it's just there's nothing. I ran the screens the night before and there's nothing even close. I might take a day or two where I don't, but pretty much every day I'm running some screens. Yes. A lot of people want to go over that ILMN here. I see a lot of questions on ILMN. Starting to appreciate that time is money. If you're fully invested with 4 to 5 stocks, how long do you give a stock that's up a little bit down, behaving badly before moving on? Well, that there's not really a rule on that. You really have to see if the train's coming in on schedule, and you have to start to learn, how to assess that. After a while, you'll get good at assessing, saying that this breakout's just not working. And the other question is, what's the alternative? Is there something else that's setting up that looks great and starting to break out? Maybe you shift that money or sell half the position. Sometimes if I have a few positions that aren't working, I'll sell half of each of them and then finance a larger position, or a full position somewhere else. So I sell, 2 half positions, you cut 2 in half that aren't working, and you finance a new position, a full position that's freshly breaking out, and you still maintain some exposure in those other 2 positions. So, Mark, what's your as far as time being money? Do you have any type of time stop, or where you'll release a hand just because it's not working?
Not a hard rule. It's always trade by trade, Usually I try not to cut anything if it's unless it's, having some type of violation. And I'll know ahead of time if I'm expecting something to go, sort of that time stop's already in my head ahead of time. Like I don't make it up on the fly. You know what I mean?
Yeah, and I think you got to be careful with that too. You can start trying to be a little too cute. You really want, you want to stick with your stop. And I would, like Mark just said, look for the violations. I outlined those violations in my book. Those violations are pretty amazing on how, when you start to see those violations piling up, probability drops significantly that the trade's going to work. At least it's going to work before it stops you out. And that's what you're trying to assess, is whether it's going to stop you out prior to stop. So to just say it's not moving, again, you'll start to realize, when something is really abnormal, but usually you'll get violations that will start piling up at the same time. And last question here, for both of us, the question is, would you ever have 100% exposure in the same sector if breakouts are working in that sector, or would you not put all your eggs into the same sector or basket? Mark?
I don't think of things in terms of sectors really. So I would say yes, but if I knew like I had 100% of my exposure in, I don't know, just say software or something, I might be a little more mindful of that. But I don't have any rules to prevent me. I want to just buy the breakouts. If breakouts are happening in the same group, so be it.
Yeah, I mean, if all of a sudden, a whole bunch of names are breaking out and I start buying them and I'm seeing they're all breaking out in the same sector, if it depends the sector, first of all. I mean, if it was the semiconductor sector, there's so many stocks, I wouldn't do that. I probably would only buy a few. I wouldn't put all my entire account into one sector, but I could see having half of it. If things are really working in a sector, you get a lot of breakouts. Yeah, you want to be concentrated. But again, let's just say you ramped up. You started off with a big sector position. What I would probably do is just like any other time, I would use a conservative, aggressive approach. If that starts to work and they run up and I get at a profit, I probably trim some back and I take it down to where maybe now, if I put all my money into one sector, I'm 50%, but I take some profits out of that move, and then pull it back. So maybe, if you get that, just like an overweight position, you don't want to stay overweight. When you get a decent move, you take some off, and now you go back to a normal weight. Same thing with sector exposure. If you're completely overweight in a sector and you happen to get a quick move because you're trying to time it as everything's moving, yeah, pull it back and go to maybe a normal weight, which would be 25 to maybe 50% max. So I would just want to apologize that I can't get to every question, but we did get to a good number of them. We talked about some stocks, went over the market a bit here. So just wanted to try to keep you guys in the loop here. As you can see, Mark and I are both doing very little. Anything that we are doing is very small, and we're sticking with the same thing that we always do. We're stick our toe in the water, waiting to see if setups are working, and not doing anything until we see the whites of their eyes. So nothing, different, nothing new. You just be patient. It's really important to be patient and not try to forecast or worry about how long you have to stay in cash. I tweeted this morning. Like, the first question, when I go into cash, is how long do we have to stay in cash? I don't know. As long as you have to, as long as it takes. As soon as you start asking that question, anybody who asks me that question, I immediately know that they're going to be pressured into trades. Like, they're not in process. They want action. They want results, and they're already thinking, I don't know how long I can stay in cash. You got to get away from that. You have to be completely agnostic when it comes to that. I know for sure that Mark Ritchie, you're not sitting there going, damn, I can't believe I might have to stay in cash for 3 months here. I don't know if I can handle it. Does that even come to your mind? I mean, at any point in time that you're worried about how long you might have to stay in cash?
No, actually, I would prefer 3 months if we had a bigger break. It would just mean we're
Yeah.
going to have an awesome period on the other side.
I love to stay in cash for long periods. If it was up to me, every year would be like this year, where I have a few months where everything's phenomenal. I make a ton of money, and then I can just go safely in cash and have no risk. I want to be in cash. I always say, if I had my choice, I'd make all my return in one day, and then I'd be in cash for 364 days. That would be my first preference. My second preference would be make all my money in 2 days, and 3 and 4 and 5, just like that. See, I want to be in the market the least amount possible, because when you're in the market, you're at risk. I want to have no risk. So I'm trying to time my trades as accurately as possible, put the biggest positions on when things are working so I can make the biggest gain in the shortest period of time. And then I'm in cash and I have no risk. And that's why I have very little drawdowns, because I'm playing aces. And if I'm not playing aces, I'm not betting big on them. It's no different than poker. You wouldn't shove all your chips. Well, you might on a bluff, but you can't bluff the market. Just remember that you can't bluff the market. So it's not, while it's like poker, it's not either. The bluffing part is got to be taken out of the equation. So you wouldn't shove all your chips in on a pair of twos. You want to shove your chips on an aces and kings. So, and again, aces and kings are not only assessing each individual trade, but you also have to assess, just like in poker, the texture of the game. How good is the game? I mean, if there's a whole bunch of great players at the table, you got to be more careful. If you're not the best player at the table, if there's 3 or 4 suckers at the table, you got a good game there. You could be very aggressive. It's the same thing in the market. how good is the market? If the market's great, then you could be aggressive. You can even make mistakes because you'll get bailed out. But when it's a tough game, you're in a tough game and you're in a hard penny environment. It's just like having a lot of really good players at a poker table. You've got to be much more careful, and you're going to get crucified if you make mistakes. And even if you do things right, it's going to be tough because you're going against the tough opponents. Same thing in the market. How tough is the opponent? Is the environment, an easy dollar or hard penny? And that's where you make your adjustment. It's simple, but not easy. All right. So I'm going to get going here, and we'll get back to it and monitor the platform, and then we'll see what transpires. But again, I don't anticipate doing a whole lot of anything big here, and until we'll see go over the weekend and then run the screens again. All right. See you guys later. Bye-bye. Thanks, Mark.